insuring the money, right? Because, I use TD Bank. I also use Wells Fargo. Those are FDIC insured, I'm sure, right? But it's $250,000 per account, right? Now, that doesn't matter if it's a business account or a personal account. Now, personal, that makes sense, right? I think $250,000 is a fine number to insure money for a personal account. But businesses, why isn't that a higher threshold? Why isn't it $250 million for businesses? Because businesses typically have more than $250,000 in the bank account.
The logic, and we can argue whether this is true or not, is the whole point of FDIC was there to protect individuals, because it was created in the aftermath of the Depression, when when literally you'd see the movies of people lining up outside the bank waiting for the money, and so it was the thought was that smaller investor, I'm going to call them investors, but just individuals aren't going to do the credit worthiness. You don't know if TD is better than Wells Fargo or better than XYZ Bank, which is down the street. And the whole point is to make you sort of indifferent to that. The average individual is not in any position to do bank analysis. Parenthetically, as we learned, neither are a lot of bank analysts, on parentheses. But so the thought would be, so it was $100,000 actually before the global financial crisis. That got raised to $250,000. The thought would be that if you're over 250, you should be sophisticated enough to understand whether a bank is risky or not risky. I'm going to argue that, I got to believe the corporate treasurers at a lot of these companies should have had at least the smarts to be able to figure it out, whether SVB was dodgy or not, but they really didn't have all the data available to them. And they also rely on regulators, and the regulators they either had the data and didn't use it or didn't have the right data. And so, I think the idea of just distinguishing between individuals and businesses is not necessarily fair. You could think of any number of small businesses that would have, a relative, call it $250,000 or less. I would say the vast majority of small businesses in this country have that or less. But, let's say, for example, you're going to build a new factory or something like that, and you might borrow $1 million from the bank, but before you break ground, you've got $1 million in the bank. And so I think that you're not necessarily doing the credit worthiness. You've always dealt with this bank, and so there's no reason, you have no reason to believe they're going to go out of business, and they just lent you $1 million. You're going to leave it there until you actually, as you spend down the money on what should be a productive investment for your business. So it's a tough thing to distinguish, and I think but what they did here was to avoid the contagion, was to say, all right, we're just going to guarantee everybody's deposits. So effectively, we just threw the $250,000 cap out the window. I think in the short term, it stemmed the run on banks. You're not having people saying, give me my money. But what it still did was it made people very wary of investing in their stocks and bonds, because the stockholders got wiped out. And the bondholders, we don't know what they're going to recover. So people got very wary about that. But in the short term, I think it did stem the run. You didn't really hear of any runs coming today of people, trying to get money out. There was one that was maybe there, but they were able to secure some funding. So we'll see what happens. But I think that part was safe. But then the other part is, well, what does it mean to be in a world where we had this $250,000 insurance limit, and now basically, let's forget about it.
Yeah, so now it's just like, well, they're not going to put it back, right? So now it's kind of sounds like, well, they're just going to do this forever. So like the FDIC, right? They have the money, but how do they insure it, right? Where does the FDIC get the money from? Now, is their money they have, is that locked up in assets? Do they got to sell some stuff, or is it all liquid? Is it coming from the government? They're going to print it? Is Peter Pan going to come in? Woo, here it is. Like, where is the money?
It's an insurance company. The banks pay premiums, for the same, just like you do on your house or your car. I don't exactly know where they keep it. I think they actually just keep it at the Treasury, where, and the Treasury, and in theory, it's just sort of, it's all book entry. It's not like there's this huge pile of money somewhere in the Treasury.
So it's just ones and zeros on a computer then.
Exactly. But the Treasury, is really the U.S. government can, more or less print money if it wants to, so to speak. And so in theory, the banks are paying insurance, and there's a formula for, how much you have to insure. Obviously, a large bank has to pay more in FDIC insurance than a small bank, et cetera, et cetera. The problem is now the insurance premiums were set based on a maximum payout of $250,000 per person.
Right. And now they're going to skyrocket because there's no.
And so now, presumably, they're going to have to raise those. Exactly.
And they can price them at whatever they want based on the risk of their business.
Well, we don't know. See, this is the problem because there's so many moving parts. If they want to do it right, it may have to be set at a number that's so prohibitive that the banks are going to basically be able to pay even less in interest than they already do in some cases. And so this is all being done on the fly. And when you do this on the fly, I understand why they did it, because they could not have they really just did not want to see a series of sequential bank runs.
Right. Because that would lead to a domino, and God forbid, right, that everyone, I always made this joke with people, right? If everyone went to the bank and withdrew their money, they call me with this end. That's
absolutely.
Now it's kind of like, well, that's not really a joke anymore. That's actually kind of possible because there's not enough money